Good morning, everyone. Once again, this is Blackforex coming to you with another pre-market analysis video. This morning, we're going to be looking at the USDCHF, the Swiss franc. So, as we stated previously, this video is for educational purposes only. This is not financial advice. Now, with that being said, we know why you guys are here. You're here because you want to find good Forex content to improve one's ability as a trader. So, with that being said, let's go ahead and get started. Now, before we go ahead and break down this Forex pair, let's go ahead and look at the current fundamentals going on with USD and CHF. As we stated in previous videos, the USD has a dual complexity coming into this week, which on one hand, it's been traditionally weak for the last several trading weeks due to the weakness from that's caused by the inflation of the American economy, bringing down the value of the U.S. dollar. Now, on the other hand, the Swiss franc has also been weak too, due to inflation and also due to its economic news has been very poor over these last several trading days. Okay, but one thing we do have to keep in mind is that the CHF is an official safe haven currency. So anytime that we have any type of global panic that can, like famine, war, anything of that nature, natural disasters, CHF will start to gain strength immediately. Okay. So with that being said, let's go ahead and get started. So being that we have the European conflict going on, and we have the USD acting as a non-traditional safe haven currency, and we have the CHF acting as a traditional safe haven currency, it's no wonder why we've just been ranging with slight breaks in the range. But generally, every time we get to this general area right here, we've been shooting up, and every time we get to this general area here, we've been shooting down. So that doesn't look like that's going to change anytime soon unless we have an outright fundamental change in the USD or CHF. Okay, so which means that one of these currencies have to either become stronger or weaker than the other in order to have some momentum to push price either one way or the other. Now, let's say we do have news in which the European conflict is leaning more towards or turns into a global conflict, then we will almost have two safe haven currencies trying to battle it out with each other, which would probably just cause more of an aggressive range. Would it just probably coming down very sharply and going up very sharply, coming down very sharply, going up very sharply, which we see has been happening in our previous last information that we got. It's been going up sharply and coming down sharply, looking like it's about to go up again. So unless we have fundamental changes that's going to push it one way or another, 9 times out of 10, we're just going to be bouncing between these two price points. So this would probably be not an ideal currency to trade. There are a lot more better pairs that have a lot more momentum going on with it and a lot better structured fundamentals going on with it that can help push price safely in one direction or the other. But this is the current situation that's happening with the USD and CHF. So if you do attempt to try to trade this pair, I would say be mindful of what is currently going on in Europe, and also pay attention to the fundamentals of the USD and the CHF. Keep it in mind the European conflict, and also keep it in mind that if the European conflict is not affecting the markets, which it is affecting it some, but not as aggressive as it was doing towards the end of the last trading week, that the only way that this was going to either move up or move down would be a fundamental shift. But that does not look like that's going to be coming anytime soon. So it looks like we're just going to be bouncing between two price points. Okay. I hope that information was helpful for you guys. Happy trading.